If we look back over the last week, we've had not just consumer confidence, but a whole range of weak US economic data. Durable goods orders down, house prices, if you look at the 20 large cities, the prices are down around 10% year on year. And with the exception of the export sector, which is obviously benefiting from the devaluation of the US dollar, it's very difficult actually to find any economic indicator from the United States over the past month which actually shows a strong picture. And this is consistent, I think, with first half of this year growth close to 0% in the United States.
Well, that's presumably, despite the fact that valuations, US stock valuations are very low, presumably that's going to mean that you're simply not going to be able to drive profits forward from here, and therefore the stock market must continue to suffer.
Well, I think the answer to that is no. And I think the first point to make is that very frequently the correlation between the performance of the economy and the performance of the stock market is negative, and you can have the two moving in completely different directions.
That's the theory, but the reality is, of course, we've still got a lot of dead bodies out there. We don't know where they are in terms of the subprime crisis, and we really don't know how bad the economy is going to get from here.
Well, I think let's go through the positive factors. Number one, we've actually had, I think, very strong action by the Federal Reserve, not just in cutting interest rates, and I think they will cut them further. They've been pumping money supply growth up to very high levels. You've had the action to bail out Bear Stearns and the action in providing liquidity to the banks. You've got the fiscal package which has gone through and which will benefit the economy during the summer months. Plus, we've had a number of structural issues. For example, the problem with monoline insurers, I think, has largely been resolved. Plus, investors have very high cash levels on the sidelines. And I think going forward to the second half of this year, some improvement in the economy because of this robust action taken by the US authorities. Plus, I think as we go into the third quarter, we'll have seen the worst on corporate earnings growth. Then I think actually markets could actually have more of a durable recovery.